What's up, y'all? This is the Day Traders versus midweek outlook for Wednesday, March 18th. Happy St. Patrick's Day to everybody. I know it was yesterday, but it's okay. Today we had the Feds hold the rate at 3.75, and we had a increase in uh producer production costs. So that was the reason for our big move to the downside today. So um and we had our switch over for the futures in most cases for everybody. Let's go and look at what we had for this past week. So we had our setup for gold. I mean dollar. Oh, let me go over. I'm jumping ahead. So this is the new rate expectation. Right now, they're saying that on our next release, which is the next rate release is in 41 days, when we are going to have the release on April 29th, already sitting at about 100% chance that we don't get a change in the rate, which you know, I didn't get a chance to watch the FOMC meetings from for Powell, but basically Powell was just saying from the little that I got out of it was just it's a lot of information that needs to be considered. Um, you know, the war is right now we're gonna have like an initial impact in inflation, likely things if they settle the sooner this gets settled, the more they will be able to kind of handle how things happen with the inflation. But the longer this goes on, the less things that the feds will be able to do with regards to doing anything to the inflation rate. Earnings for guidance are still showing progress, and that's kind of what's keeping the economy afloat. Like we still having big name numbers, people still making earnings, and they're doing it with less employees. We are getting an uptick in unemployment, which is something that it is affecting us. And it's one of those type of catalysts that they don't like to air out a lot, right? The last thing that you want to do in an economy when it is like going south is talk about unemployment because those things put people in panic. So that's kind of why we aren't getting as many headlines about it when the reported rate is right now 4.5% unemployment. But you know, without me considering my personal feelings, I promise you it's a lot worse than that. Usually those numbers are a little delayed. So, um, and I just saw recently, um, Amazon, another big name, they're about to lay off 18,000 people. And I think that that number was for the first quarter. And then I think they're going to do another round of layoffs in second or third quarter as well. So that's just the ongoing trend. They're saying that it's AI, but really what they're doing is they're laying off their full-time employees and bringing in contracting so that they can get the same amount of work for a cheaper price. So that's that's not really an opinion. That's just kind of what I've seen the trend of the market be right now. So this morning, 8:30, this morning was a little weird. The market started moving around 7:45, 7:30, 7:45. It was already starting to tank. So they had already pretty much priced in what the move was going to be from the start, soon as pre-market opened up. So even though we got this CPI number, the expectation was 0.3%. And what this is saying is that the cost that producers are taking on right now to create products, it is costing them what they expected to be 0.3% is costing them month over month 5%, month over month 7%. And the difference between core and PPI, so this is the change in the price of finished goods and service sold by producers, excluding food and energy, right? So you can see too, it was up. They projected it to be 0.2% in January. It was 0.7%. They expected to be 0.3% in February. It was up 0.8%. So, and then these numbers are kind of off because they're actually reporting December and October when the government was closed. So this is core month over month, 5%. The PPI is change in price in finished goods and service sold by producers. And this doesn't include food and services, right? So I'm sorry, it doesn't include food and energy, but again, that's also up 7% as well. Then you had crude oil inventory. Did we get, let me refresh this. Then we had crude oil inventories as well. This is basically saying that they forecasted that we would have a net negative amount of zero point 0.5, but we had more in storage. More in storage means that nobody's buying, probably because of higher prices. So when we seeing that we have an oversupply, that means that we don't have enough buyers to meet what the supply is, right? And that means that they are going to have to try to figure out how to bring the price of oil and the supply of the oil to an equilibrium, which that's usually a sign that we're going to get more inflation. And the research that I've done is that once you start seeing oil prices increase, gas prices increase, and energy prices increase, that means that it costs more for the people who produce those to make those. That in turn costs more for the transportation. That in turn costs more for the producers of products because they got to spend more to transport and supply the goods to the customers. And in turn, that then trickles down to the customer. So the PPI measures the price for the producer. CPI measures the price for the consumer. With with the PPI being higher, we probably may get a higher note on the CPI. And what we had been seeing before we moved into this year is that we've been seeing that a lot of the companies were taking on the brunt of the cost. And you also got to factor in tariffs too, because they were taking on the cost of tariffs. And now they're taking in the cost of the war, essentially by the trickle down effect of the oil supplies right now. So, with those two factors involved, I don't think that we're going to see them take on that hit anymore because that cuts into their bottom line. So, they're going to start passing more of those costs down to the consumer. So, um, and the longer the war goes on, the more we're going to start seeing these things fluctuate. The last thing about this is these prices, this forecast versus actual, this is actually even worse than kind of not fearing, not spouting doom and gloom, but it's worse because these are numbers that don't consider the war. So we are seeing spikes in inflation, and this is reporting for February. This doesn't take in consideration that the war started on February 28th or somewhere around that. These numbers don't include that. So there is a very, very high probability that next month when we go into CPI, to get the CPI numbers for next month that they'll be even higher than this. So keep that little nugget in the back of your mind on that. Write that down somewhere in your journal, because we'll need to kind of monitor how the CPI and PPI look next month, because that'll kind of give us a clue into how we go into our seasonality. And right now, seasonality, that exercise when we went over like how the seasons push the market, it's not looking good. It's not looking good for us to have a recovery kind of year. This looks more like a retracement for a down year. So not looking great. um, and again, like we said, 2 p.m. we had the Fed rate release, 3.5% still. Powell spoke. And then we had our uh we had our contracts roll over for the futures as well. So um then let me check something out. I just want to see something. Personal vendetta, sorry. Let's see what y'all did. Okay. Yep. Mm, look at you. Mm. They reported earnings. Reported 1.67. Mm. Hmm. I should have shorted them. Anyway, uh no real oops. No real earnings this week. No big name earnings. Um Macy's reported, General Mills, Micron reported. No option plays so far. Like I'm not liking options this year so far. I mean, I don't think I've even looked at any options set up so far. And again, it's only because I'm typically bullish on options because I just want to buy and hold those. So that's kind of why I haven't been looking at any option plays. So if y'all are wondering like where the option plays are, I'm not trying to chase it right now. Right now, priority is my six accounts, my six funded accounts, and my six PA accounts, and then the other nine funded combined. So nine combined accounts. So I'm just trying to focus on getting all of those done first. So once I get those done and I take a couple payouts, then I'll kind of move into back into options because I'll take some of the money that I made from my payouts and move them into the options. Tomorrow we do got Alibaba, we got FedEx, Accenture. Those are some names we want to look out for. Um, Nothing really on Friday. And then on Thursday, we have unemployment claims. Those are going their forecast is 215. We got Philly Fed manufacturing index, new home sales, and then pay attention to natural gas as well, because that's also one thing that's been affected. And then Friday, we got a clean slate. So what we'll do on Friday is since we got a clean slate on the news, on the USD news, we'll need to listen out for any headlines that come out on Friday. So, um, and like I said, nothing on the earnings for Friday. You see, that's another clean slate. So Friday might be a good day. Thursday, since we had this big drop, you know how it is. We get a little back and forth on days after a big drop. So, unless we get a big response from the news, um, that may be our catalyst. So keep an eye out on what happens at 8:30. I would say try to get your trades in early on Thursday. Get in, get out, do what you got to do. Don't try to get a hold because it may chop. And then that's what's been the trend lately. Thursdays have been chops, chop days. So, keep that in mind. The other thing, let's check CNBC. One thing I did notice that one major thing that came out just a while ago, Trump sent out a tweet on Truth Social, and he basically said nobody is willing to help him open the Strait of Hormuz up. None of the people in NATO, none of the allies, our allies, agreed to send troops and send forces over to the Strait of Hormuz. This is looking bad. This is not good because he boasted that, everybody should be helping. But they basically said that this is not something that we condone and we will not be sending troops over, right? So that's the one thing. And then the second thing is that Powell, he decided, and he mentioned in the FOMC meeting the that he would be staying on until um, the new Fed chair, which is Warsh, is sworn in, and also he would be staying on as hang on one second. Let me get my notes real quick. Hang on, let me get my notes. He will be staying on. He will be staying on um, to help the transition, so that until they affirm him. And then he also mentioned that he'll also likely stay on until they finish the investigation. The DOJ finishes their investigation on how the Fed was spending money. That's something that Trump introduced to Powell regarding the spending on upgrading the Federal Reserve building project. So um, that came across. So um, he's mentioned that he would stay on until then. So keep that in mind. It still looks like it'll be uh, him leaving around May or in April timeframe. His time to serve as Fed chair ends around that time anyway. Ship traffic in the traffic. Hang on. Something just came across. Ship traffic in the critical Strait of Hormuz has plunged. Yeah, we already know that. Okay. Um, let's review what happened. So, this was our dollar projection. Overall was to push down to our new week opening gap from last week, with a couple stops below this low from Friday, this low from Friday, trading down into the new week opening gap high. If we look at dollar, there's that there's this low. We took out this low. We traded into this little small gap right here, but we didn't quite make the high. And then we end up getting a bounce from here. So that's okay. We pretty much met the requirements of that downside move. No push to the upside. So dollar was pretty weak going into this week. So now what we have now is we got this swing low. I mark these up kind of quick, so might be missing a couple things. We got this swing low right here. We got the low from yesterday. Well, today. This is our weekly low. And then we got a small fair value gap on the 1 hour here and here. I think that's what we're gonna have to deal with first. I'm not gonna draw it all the way out. I'm just gonna put our little box in here this time. So got this little fair value gap right here. We'll just take both of those candles, and that's gonna be where we get our first chance to get a low. We come in here. If we can't take this and bounce off of this 1-2 gives us a retracement to low. Go ahead and take out this low, and we get our three at or below this low for the weekly low. We make a new weekly low, and right around this area is where I'm looking for high probability bounce on our 3-4 move to the upside, and that would be highest area for us to consider to see price push up from there. So that's what I'll be looking for on that one. Let me clean that up. That's the weekly high. So the previous week high, our weekly highs are sitting up here. I'm not gonna add those, but because they're so close to the weekly. Then if we get our 4 5 traces a little deeper into this new week opening gap. The new week opening gap sits out around um from last week, which we traded down or near pretty much already. Already kind of came and tapped into that. Let me see what this price is 44. What this point is 344. And then if we get the upside move, there's some previous week highs. You see this cluster of them right here. Then we got this order block. So I'm thinking if we do push up, we take out the highs, come into this daily order block, and we respond at the 1 or the 3 from there. The 3 is roughly around the middle of the daily order block. And this previous day high is right around the high of it. So that's pretty much where I'm seeing us move to as far as where price should probably take us if we do push up. If we do push up, and then if we were to get a retracement, it should happen at the 1-2 move here, right at the low of the order block, or at the 3-4, somewhere in the middle. Consequent encroachment of the order block. And if we want to keep pushing up higher, we can use that order block as support for the 3-4 retracement, and either we sell off from there or we push up from there. That makes sense? Track
Yeah.
it?
Yeah, yeah. Tracking.
Okay,
Mm-hmm.
cool, cool. So let me give you guys this chart. Mhm. Mhm. This is DXY. Let's drop this over here. And let me just go ahead and get this set up too, so I can kill two birds with one stone. Weekly outlook, midweek over here. Copy. I don't know why it's flat came like this. I don't know. That's weird. 318, 318. And then let's get rid of this because this always jacks us up. How did that come out? Okay, cool. And now we can add it back. Alrighty. So that's our post and let's get this going. Copy the link, drop it in here. DXY. All right. Now let's look at goal. So goal, the objective on goal was here. Gold, we were either going to consolidate inside of this inverted fair value gap, or we were going to push up, trade into this little small order fair value gap and order block right here. Take out these highs. Our one would make a high at or around this level. We'd hold inside of this and push up. We didn't make any of the upside move. We pushed to the downside. We consolidated, then we just tanked. So our 1, 2, 3, 4, 5 move, it happened, but it was just like it didn't really happen clean. It just stalled out inside of this inverted fair value gap. Then it just tanked and went all the way down to 5. So this played out, but it just didn't give a clean setup on gold. Gold was just hold sideways and drop. So you'll see it here. This is how it played out. So we opened over here, went sideways, and then just we decided to drop at 3 a.m. on Wednesday night, and that was it. So and it's just this week was like that. This week was a week of everything playing out as far as the charts go, but just the timing on the setups were just, it wasn't clean timing. It was happening overnight. It was happening very violently that you would get the move, where you couldn't get a setup off of it. And, sometimes it's just like that, sometimes it's like that and you got the right setup, you got the right thought process, but this it's just moving too fast for you to respond to it, or it just doesn't give you a clean setup, and you don't get all your confirmations in order for you to make the trade the way that you want it to. So and in those days you just have to take those for what they are, and they're information. It's information, um, and that's all you can do with that, Like I only traded once so far this week, and it's just, I saw my setups, but it happened while I was asleep, or it just happened like really janky, to where I didn't have a chance to react, or it just wasn't a smooth setup, or it happened like today, the main setup that I was looking for, it happened at 7 something in the morning. And my rules are don't trade before 8:30 news, And then if I trade after 8:30 news and I don't if 8:30 news happen and I don't have a clean setup, then wait for the 9:30 opening. I did both of those and I didn't get an A plus setup, so I took a trade that was outside of my better setups, and it was probably like from what my grade was on ChatGPT, it was a B plus setup. So if it ain't an A plus setup, I'm not using full risk. I'm just gonna use like partial risk. So that's how I approached it. So going into the rest of the week, 0 to 1 move to the downside. We've already taken out the previous week low, set a low, and we got a new low here for the week. I'm not going to add it because it's a chance we will likely take that low out. But for now, I have a little small fair value gap that we need to deal with to the downside right here. Not going to but draw it out, but it's right here. We're gonna have to deal with that, right? If we do push through that, this takes us back into this 4 hour fair value gap to the downside, this bearish fair value gap, and then we likely get a response inside of the fair value gap where We get a 1-2 move that either holds inside of the fair value gap or it either holds inside of the fair value gap or rejects at the one and we get to move to the downside. If we hold inside of the fair value gap, we'll need to watch out for price responding to the midpoint. And if we do get a response at the midpoint, there should be an order block around the midpoint and likely around the low. So remember, there should be, if we start to invert, we'll have an order block near the low, middle, and the high, right? And at either we reject at the one or the three to go to the downside. If we do hold for the move, if we do get a rejection at three, if our 3-4 move holds inside of this fair value gap, you can take that up for the 4-5 move to the upside. If not, the three sets us up for the move to the downside. Right now, is we're bearish, and a 1-2 to the downside takes us into this hourly fair value gap. We could get a bounce from there. So the one and the three are the most probable areas. But if we get this 2-3 move to the downside, I want to see where I want to see us actually hold on the inside. But if we don't hold on the inside, I can see the three taking out this low, this previous day low. And then if we get the three, we can bounce from the three or the one. Those are the two areas I'm looking at. So even though I drew the three all the way down here, I'm actually higher probability is we wick down here, the body closes back inside of the fair value gap, and then we get a potential move to the upside. So even though I'm saying that, hey, we might push down to take out this low, you see how this candle look right here, where it wicks and then the body closes near the low of this inverted fair value gap. I'm looking for something like that. And then it pushes back up to the upside. So that's kind of what that'll look like. So you see this candle wicks, it takes out these lows over here, and then the body actually closes up and back in. And then the next candle, oh, let me put you back on. So this candle right here, the wick, the next candle is bullish. Even though this didn't work out, this is what it would look like if I was looking for a move to the upside, right? I would want to see wicks get taken out, lows get taken out. We push down into something bullish, which is this right here. And then we start having wicks that reject through it and then start to push up. This didn't work out now. So that's okay. I'm okay with it that this didn't work out. This is just kind of what it would look like if we were to go ahead and start flipping the trade. Um, Another company, HSBC. This just came in, right? This just came in. HSBC Bank considers a wave of deep job cuts over the coming years on bets AI will shrink its middle and back office footprint. More news on layoffs. So that doesn't look good. All right. Okay. So now if we do get the 3-4 and we fail, and it should fail inside of this 1 hour for a value gap, and then the 3-4, the 4-5 move takes us, if we haven't taken out this low, this previous day low, the 4-5 takes that out, and then there's a little low liquidity that will get taken out. Okay. So this is gold. This is gold. And we'll drop that in the group. That makes sense. Tracking?
Tracking.
Tracking. Okay. All right. VIX. VIX. VIX was very bullish today. And that was another reason why it kind of threw me off. Let's look at VIX projections for the week. We had projections of VIX moving to the upside.
Threw me off means, means you were trying to take a trade.
I was looking at VIX and I was expecting VIX to make a certain move. It did it, but it did it sooner than I thought it would.
Okay, okay.
Yeah. So you see this little gap over here on
Mm-hmm.
VIX. Um, week held into Friday closure, held inside of that gap, and it was either we push up above these highs, trade into this gap, into this order block. That's where our one was supposed to come, our three was supposed to come somewhere inside of the last week's new week opening gap. It was a broad, a really big one, and then, but instead we got our move to the downside, take out this low, bounce off the monthly, failed to make a higher high, and then our two went ahead and took out these lows, and then we got a bounce after that. So this was our downside projection. We pretty much made the downside move and we made the move to the back up to the upside on VIX. So um that was our weekly opening. This was a weekly opening right here. That's that gap that I was just talking about. We didn't mess with any of the upside stuff. We just pushed down. We just went ahead and took out this low, took out that low here. So we had our 1, 2, 3, 4, 5 set up, but it was just straight down. No real means to like see any clean price action, right? We left the opening gap. We left another gap here on Monday into Tuesday, and then we gapped open on today, Tuesday into Wednesday, right? So this morning on my trade setup, which I talked about in our chat, um, was I was expecting prior to this, right around 7, I was looking at the chart and I was like, I wonder if we're gonna take these lows out and trade into this price gap. It's from the daily, and then try to make this move up. But just all of a sudden, we spiked up, a lot of volume kicked in, and then we start seeing this get filled. And once this got filled and pushed up to this gap, we were already pushing down on ES, NQ, and YM. So this was actually the move that I wanted to see happen. It just happened really early in the day. So I didn't get a chance to participate in the original move. And I think I caught something along the lines of this 10 o'clock candle and some of this move to the upside, right? So, um, but now going into the rest of the week, volume should tamper down a little bit, taper down a little bit. But if we do get a move back down, just know we'll need to come back and figure out how we're going to respond to this gap. If we sell off, there's a little order block right here. It may give us a bounce at one, and then we move back above the monthly. If we if we fail the monthly, our two rejects, our 2, 3 takes out the one, and we trade back down probably right around the opening gap at or near the opening gap, but we definitely take out this low. Our 3, 4 is another area I'm thinking that we get a bounce from, but I think the highest probability will be our 5 that we get a bounce from if we do try to push back up. Our 4 rejects inside of the gap from Monday into Tuesday from Tuesday. And I think the highest probability is the bounce is going to be 3 or 5 that we bounce from. If we just keep pushing up, if we just keep pushing up, there's a little couple of you probably see it better. Let's see what it looks like on the 4 hour. Yeah. So we got a fair value gap here in the order block. And there's an inverted fair value gap here. I'm not going to draw it because all I need is this gap, the gap, new week opening gap. But if we push up, we come, got to deal with the weekly opening price and the low of the fair value of the opening gap, the weekly opening gap. So that's where we got our 0 to 1 move. We get a rejection or a retracement inside of here somewhere. Oops. inside of here somewhere and we respond to that area if we're going to get a rejection. Our 1-2 brings us back down into this little small fair value gap slash weekly opening price. And we either hold here or we sell off from the 1-2 move. And then if we hold, we push back up through, we take out this high. Not gonna add it, but that is one high. Yeah, I will. I will add it. Let me quit being lazy. This is swing high. This is from Friday. So we got this swing high here. We got this swing high. We take out that swing high and either we reject here on our 3-4 or we hold back inside of the new week opening gap to go higher. And we take out this previous day high and we likely trade into this 1 hour order block on, you can see it up here on VIX. Tracking? Make sense?
Yeah.
Yes, sir.
Alrighty. Let me drop VIX. I like having this pointer. I think it's gonna help.
Yeah, it has me a lot to follow you.
Yeah.
Okay.
When you are on chart, then it's easy.
Cool, cool,
Yeah.
cool. Okay. All right. Now we get in our doubt. So this is the new contract. We're in the M contract now. That's the June contract. Um, I already marked this one up. I'm gonna mark up ES as just to kind of walk through how you would want to mark up the new contract for you guys, just how I look at it. But downside is we took out, we had a yearly low here at what was the yearly low point? Yearly low was 46,624. We took that out today on Dow. We got a new low. I'm not gonna mark it because we still could actually go lower. We actually took out a previous month low as well. We pierced it, and I'm still gonna leave it intact until we actually get a clean trade through it. Um, and we also traded into this daily price gap right here. So right now we need to see how we're gonna deal with this price gap. If we're gonna push down, we'll probably push down at or around the midpoint or this lower third, and then I think the one will give us our biggest high probability bounce. And then if we do bounce on the 1-2 move, if it's gonna continue, it should go ahead and push up and hold back above the previous the price gap high, and then we continue from there. And then you'll want to see us trying to get into the new week opening gap and then how we respond to that. If we push up, right? If we push up, that's like mainly where you want to see us go. Because if we get up here and we can't get higher than this, then we start another move to the downside. Then if we get our 2-3 move, we take out the one, we trade below the low of the price gap, and then we come after this previous week low. And then 3 is another area we can see the bounce from, but at that point, if we do get a bounce from here, we got to deal with price coming back in here, and this will be inverted at this point, so that could reject to go lower. So that's where our 4-5 sets up. If we do just decide to run, I would want to see to the upside. I would want to see price push back up inside near the weekly opening price. And how do we respond to this new week opening gap? If we get to this gap We have a little order block right here too. If we get to this gap, we should see our one reject somewhere at or near the weekly opening gap or the weekly opening price. That should give us our 1-2 retracement. And then we're going to want to see if that 1-2 retracement wants to hold inside of here, or do we want to start to sell off from the one? So I like the 1 and the 3 to be our rejection points if we get any, right? If we don't, and the two holds, the two takes out one, and then we trade into the low of the 4 hour fair value gap. And we get price pushing up at or around the lower third. You can see the lower third of this order block. There's an order block. If we add in that level, that is the 7.5 level. If we add in that level, you see where that order block is right at that level, right straight through it, right? So that's high probability stuff right there. That's what you want to see. So that's why we want to see if price will come to this area and we get a rejection here. If we do get a rejection, that sets us up for the new move to the downside or the four holes around the weekly opening gap and we get a higher move up and we take out three, we take out this order block, and then we push higher into the 4 hour fair value gap. That makes sense?
Yeah.
Cool, cool. So this is Dow.
Can you
Dow.
open 4 hour? 4 hour.
4 hour chart.
Mm-hmm. Just
Okay.
in this only. Means in 1 hour we can't see that far, right?
Nope. Nope.
Yeah.
Yeah, I'm gonna go over it when I go over ES.
Yeah, yeah, sure, sure.
Yeah, yeah. Because you'll see what I'm gonna do to kind of compensate for the information that's missing.
Mm-hmm.
So that's Dow dropping that chart. NQ. NQ, similar situation. Um, except we got this 1 hour fair value gap, our low for the week. So if we push to the downside, we trade through the new week opening gap and we trade into this 1 hour fair value gap, right? That's the first place we probably get a bounce from here. And then that move will push us to the upside. So I'm looking at 1 and the 3 as being high probability bounces. And again, same way as I said before, I actually like the 3 to hold inside of the 1 hour fair value gap. We could push down to take wick this low on the on the 2-3 move, but again, bodies should be mostly at or around this 1 hour fair value gap to push up. And if we do push up, just like if we push up on the one, we'll need to see price above the weekly and holding inside and above the weekly new week opening gap. If we get a 3-4 retracement that doesn't hold and rejects, this is inverted at this point. So this 4-5 move will definitely come to take out. There's a high probability the 4-5 move takes out the yearly low if it hasn't been taken out already. And then we can see price pushing down to or at this previous week low. On the upside, right? There's a some look at the 4 hour. There's a fair value gap that's here. And the reason why I didn't add it, because this whole range, you could really mark both of these up. And a lot of times the first fair value gap doesn't get used. And we're just creating this second part of the fair value gap. So we got the high here, we got the bullish engulfing, and we're just now forming this low. So once this candle close, go ahead and add this fair value gap but for now, it actually hasn't been confirmed. So this was the only one that's confirmed right up here. So we're gonna go ahead and go with that for the upside, right? It's there. If you want to put it on the 1 hour, you can put it here, but the 4 hour take precedent. So um, that's why I'm waiting on the 4 hour to kind of finish itself. But if we have that, we have the 0 1 push up somewhere at or near this order block. There's another one right here. You can see it on like the 15 minute, right? So it could even reject around here, but I'll just say, let's just say it pushes up at or near this one on the 1 hour. There's another order block too. And then because we got this little fair value gap here, it may want to use that to hold us to push us higher. Um, if we get the 1 2 retracement. But at the same time, the 1 and the 3 are my most high probable areas for a price to reject from. If we're going to start another move to the downside, I expect price to reject at the 1 or the 3. And then if we do get the 3, that means we've traded above the monthly and we've traded up at or above this 1 hour order block. And we may see some support there. So if we get the 3 4 sell off that and it doesn't start to move to the downside, we price holds around this area and we get our moves higher for the 4 5 move to trade deeper into this 4 hour fair value gap. And eventually the aim will be to take out the weekly price. So any questions on that one?
No, I'm good.
Okay. All righty. All right. So I'm gonna do an exercise on ES and show you how I'm marking up ES. So
Yeah,
that way,
yeah, I did that MNQ, but not MES.
yeah.
Mm.
Okay. Just to show y'all, like start to finish, right? We got the new
Mm.
contract.
Mm-hmm.
So the first thing is the old contract is MES H, and that's going to be the same thing for NQ, ES, and Dow. You, if you're in the old contract, is MESH, right? This got all the stuff on there, right? Got all the stuff on there, right? That's all old. We can see all the stuff that happened from this week, right? But we'll need to move to the M contract. The M contract is June 2026, right? So first thing you want to do, higher time frame. Start with the monthly. That's the first thing you want to do. And it looks weird because you don't have a lot of information because this is the futures contract for June, right? So you can see in our recent activity,
Corey, again, what was that indicator that you have to the left that gives the monthly? Yeah, that.
this one, it's called opens, this one, and
Opens. Okay.
yeah, and then let me just open it. It's this one. The ones that I got marked are the some of them I have the 3 month, but it's the quarterly. This was basically the quarterly opening price. And I keep the yearly, I keep the monthly, the weekly, and the daily on there.
Okay.
I don't make any other changes to it.
Okay, that's what I was going. Okay. All right.
Yeah.
Thank
Sometimes
you.
I put the quarterly. I'll probably put the quarterly on for sure on going because we about to get ready to move into the next quarter. So let's just go ahead and add that on. And you can see it. It's the since we still in the first quarter, first 3 months of the year. it's going to be lined up with the yearly. But when the next should be about to get ready to change soon, you'll see this line move on the next quarterly open. Um, so we got a low here on the monthly, right? We got our low here. So this is a previous month low, right? Did we take that out? I think so. We pierced it, right? Then we're gonna go to the weekly. That's the only major thing that's in range, right? We got an order block. This candle right here is just below. So if we do keep going lower, the order block is where we want to probably come into. There's a gap right here too. We've already kind of dealt with this already. So I'm gonna leave that off. Then you can see this gap on the weekly. This is what's called a volume imbalance, but we just gonna put a price gap right here because I don't think I got I don't have the fibs for that. Open at 45 flats. There's that, and let's get rid of the background. Okay, and I'm gonna just add a note here. This is the weekly. Let's just change this. Volume imbalance, BBI. Let's make a new one. This is what I'm usually doing when I'm like creating my little custom fibs, right? I'm just like adding it in, right? So this is a bearish volume imbalance. And what a volume imbalance is when you see a gap and you may see a price gap like this, but you'll see the wicks touching. Like this wick overlaps this wick and this wick, but there's no bodies inside of here on this particular time frame, right? So that means that even though price traded, it's very thin inside of here, right? You see it again over here from this close to this open. You can see the gap in between where the wicks overlap each other, but it's no full body candles inside of that range, right? So that's what you would call a volume imbalance, right? And the way you want to look at this is just the same way that you would look at the high, middle, and low, and then your lower thirds and your upper thirds. Same way. It's the same approach. A lot of the stuff is you would respond to it the same way. It's just called something different. That makes sense?
Yes.
New guys, that makes sense?
Yeah, that make plenty sense.
Okay. So we got a weekly bullish order block. And since this is so big, I'm gonna actually put fibs on this. So that way I can know where these price levels are. So we're gonna put order block fibs on.
What happened that day? Was that news?
What day?
Or that week?
This is a weekly candle, so I don't know. I don't know exactly what happened. Yeah, I don't know.
July 28th.
I don't know. Okay. So this is our order block. So this is so a big one. So I wanted to put this whole candle on here, right? So that way we can see the levels and levels in between, right? And then inside of there, we got this swing low. This is a weekly low. So if we get inside of here, this is going to be an area we want to pay attention to because there's liquidity below that low. And then this is everything we need to consider for the downside, right? The most immediate thing that we need to consider from the upside is this volume imbalance, right? So we don't really need to look any higher until we get through this area, right? Since we already see we bearish, right? Since we see that we bearish this previous week low, previous month low, and us coming into this bullish order block and likely coming into this previous week low are higher probability than us coming back and pushing up higher than this. But if we were to, it would be this monthly price and then this gap that we would need to be considering. That makes sense?
Yeah, that's make plenty of sense.
Okay. Let me go ahead and
That's
save this. We're going to make this a bearish volume imbalance. And I'm going to just spell it out. And whenever I see a bullish one, I'll add that one too later on. I see one on the chart, but I don't care about adding it right now. So now I can use this whenever I need to later on, like right here. This bearish volume imbalance is already there. You can just use it later on. So if we were to push up, we would need to deal with this from a weekly perspective. Now we're going into the daily. Just clean that up a little bit. Now we're going into the daily. What do we see on the daily?
One more thing on weekly.
Yep.
So, like September 2nd, there is means week, yeah, weekly gap. September 2nd. Yeah.
Yeah. Yeah,
This.
like I said, we pretty much have dealt with this.
Uh-huh.
We kind of dealt with this, but you're right. I'll
No,
put it on there.
yeah, no, that one is already done. But for right now, bearish like previous month low and that OB high, right? In between that 1 and 2 September, that
Yep.
gap,
Hmm.
September 1 and 2.
This price.
No, no, before that, September 1, yeah, this one and this bigger one. Yeah.
Yeah, because we just moved over into this contract, it's the same kind of thing. Like we won't see all the price.
Okay.
We just won't see all the price
Mm-hmm.
because it's not delivering all the price.
Okay.
And I think that eventually it will clean itself up,
Mm-hmm.
but for now we just have to kind of roll with what we got issued out.
Okay.
So that's why it kind of looks a little weird. But
Uh-huh.
this gap right here
Yeah.
is standing out right here.
Mm-hmm.
67.50. And this is a bullish price gap. We just got to work with what they gave us, you know?
The previous week low and that equal lows are there, but yeah, still it is there, right?
You talking about this
Yeah,
and this?
yeah.
Mm-hmm. Yeah, I just put it as this.
Mm-hmm.
Yeah. I just left that one monthly low
Yeah.
from the monthly. Even though it kind of wicked it already,
Mm-hmm.
it's didn't put a full body through it.
Yeah.
So I'm gonna still say that that's intact for now. So we got our weekly gap, our daily gap. I'm sorry, that is a weekly gap. We got our weekly gap. And now you can start seeing what we got going on this week. I'll put the gap for here. This is this week. This is the gap down this week. Open is 61.25. Let me just double check. Yep, 61.25. And we need to flip it. Okay. So right now we sitting in the middle of the weekly opening gap. And then you can see it's overlapping with this gap from from months before. We don't really have a lot of upside right now. You can see we are forming a fair value gap. We responded to this fair value gap. We responded to this. There's a fair value gap here. And we got the overlap of this volume imbalance to the downside from the weekly. And we rejected it and we sold off from it. So now we need to look at what happens with these lows, what happens with this low and the low from way back then. And if we keep pushing down, we know that these are targets, and then us trading into this weekly gap, weekly order block is a target, and then later that'll be the target. All right, so now we on the 4 hour. And you can see we just kind of breaking it down. Like, what do we see on the chart that could cause us problems? This is our new yearly low right here. So this low is important low. This is the most important low because if we trade below this, we turn bearish for the year. And we've already done it a couple of times because this was the low. This was a low of the year. And we just made this low of the year. This is the low of the week so far. And I think we just tapped it over here. So this is actually the low of today. So that's probably has a high probability to get taken out. And you can see we just we're forming right now a 4 hour fair value gap. There's another one up here, right? So this is probably where we're going to look to see from an upside perspective that we get price to push up to. And then you can also see that it's overlapping this volume imbalance. So, and then there's an order block somewhere around the low of this volume imbalance. We'll see it on the 1 hour. So we got a lot going on and we almost to the finish line on this. You can also see another thing, and I think we talked about this before, right? The daily gap is usually bigger than the lower time frame gap. So like it's coming all the way up here. But if we looking at the 1 hour, the gap is from this to this. And I don't know if you remember, I told you you can draw it like this, where it's on the 1 hour, but drawing it from the daily will take care of all the lower time frames because it'll still be inside. So if I looked at the 1 hour, the gap is here. If I look at the 4 hour, the gap is from here to here. If I look at the 30 minute, the gap is from here to here. If I look at the 15 minute, you can see the gap is from here to here. If I keep going down to the 5 minute, you'll see that it look a little different still. The gap is all the way up here down to here. But if we were just looking at the daily gap, which is the most accurate, it already has all of those other time frames in them already. So if we just kind of stick to having that daily as our gap, we know we'll get all of the lower time frame stuff involved. And we don't have to worry about thinking about did we draw it right or did it line up the right way, right? And then here is our fair value gap to the downside up here at the top. So this is our upside target. If we do push up, we can see now finally we got a whole storyline, right? This is our weekly high. Got the whole storyline, right? So now, like for Raji and Cars, do y'all kind of understand like how and why like I'm considering certain areas as targets and like why I am saying like, we should probably go to this area or this area. Are you grasping that?
Yeah, it's pretty. It seems like you just if it's going toward the downside, is is more likely to pull towards the downside to the gaps it's inside of. And if it's going to the fair value gap going upside, it's going to pull toward the upside, right?
Right. And it could be more than the fair value gap.
The order block and the
It could be an order
all the
block.
gaps. Yeah, all the
It could be
gaps.
an order block. It could be a price gap. Anything like it's gonna draw towards something that has liquidity or
I was
something
just
that
very liquid.
yeah, it's gonna draw towards liquidity or it's gonna draw towards filling an imbalance. One or the other.
Okay.
One of those two. So those are the things that the market always gonna do. It's either gonna be looking for liquidity or looking to rebalance. And a lot of times you're gonna rebalance inside of fair value gaps and order blocks. Like that's why if you go back and just look at all of your, look at your notes or go back and look at any chart you want to look at, the high or the low is probably inside of either a fair value gap or order block or some kind of price gap or something along those lines. A lot of times, it's fair value gaps, though. That's why I like fair value gaps so much because they tend to make the most highs and the lows. You tend to find if you see a high, if you look to the left, you're probably going to see a fair value gap
Right, exactly.
in most cases, right? If I look at this high, I look at the left, there's
No.
an order block over here. There's an order block here at this high and at this high. And anybody been getting a lot of spam calls, man. I've been getting extra. I feel like I've been getting extra spam calls.
I am also. Yeah.
Everybody hell, I don't know what's going on.
Yeah.
I think I was starting to change my number.
I was thinking the same thing today, man. I literally was.
Yeah,
Um,
Lee.
you see this low? If I look to the left, there's a fair value gap, right? I see this low, look to the left. Got to keep looking a little further, but there's an order block right there. So there's always either an order block or a fair value gap somewhere involved in a low or a high. So that's why you got to consider even this low. There's a fair value gap and an order block right here. The wick comes to this body and then it moves up, right? So, and then if we look to the left, there's a high and another fair value gap, and there's an order block right here. So it's like most of the time those things like overlap each other. And it's the same calls that I'm getting, right? You've been approved for an installment loan of up to $75,000,
Me too.
estimated monthly
Yes.
payments as low as $400 per month. We've already seen a number of approvals close out. I have blocked this number
But
and
Man,
again, you will get
I blocked them folks. I asked them to stop calling. I done told them everything. Cussed them out. They done cussed me out. It's crazy, bro.
I blocked, deleted, and reported this number or a number doing the same thing
yeah.
at least 79 times. This is absolutely ridiculous. Absolutely ridiculous. Something has happened. Something's happened. But all right. So now, what do we expect for upside and downside projections? I like to start with the last candle from the close of the day, which is this 1600 candle, right? So if we look at downside targets, right? Our 0 to 1 should definitely, again, clean this low up, right? Then we have this previous month low. So on the first 0 to 1 swing to the downside, that should trade through this gap that we're inside right now, and we take out this monthly and yearly low. That's what should happen. Then if we get a retracement on the 1 2, the 1 2 should use this area, the new week opening gap, and this gap from higher time frame. It's inverted now. So if we're gonna come into this, this should send us up higher, or it should reject at or around this level. If we do get a rejection to the downside, whatever low we made at 1 gets taken out. And this takes us into our weekly order block. Likely. Likely takes us into the weekly order block, where the we could also get a bounce from coming into the weekly order block. And so that means that really our high probability areas are the 1 and the 3. So if we're gonna get a bounce, it's gonna happen at this. And there usually when it's the first time it tap into an order block in a long time, is it's usually gonna bounce anyway. It might not start the move to the back in the opposite direction, but it at least should bounce. So this is where our 3 4 should trigger from. And if we get the 3 4 and if it wants to push up, we should see price start to hold inside of this higher time frame price gap and back inside of above the weekly opening price and hold above the new week opening gap that we already got over here. If not, it rejects. And then this 4 on the 3 4 move, whatever low we made at 3, we try to take that out. And then our 5 probably comes to or at this upper half, upper quadrant, which also lines up with this low. Our upper quadrant on this is almost probably right around this weekly low. You can see is if we split this in half, it's almost right at the halfway of this upper quadrant. You can see it's pretty much spot on. So we can just say our 5 likely comes around at or around somewhere near this area if it does want to continue lower. That makes sense?
Yeah.
Yeah, it made plenty of sense. So
So,
basically, Corey on the bounce when it like on the bounce, when like from the 0 to 1 on the bounce,
mhm.
the 1 to 2 is usually gonna hit that the price gap or whatever gap is in, right? And then
Well,
the 2 to 3, I'm gonna say the 3 to 4, it seems if it's gonna keep pushing down, it seems like it should it'll hit lower than the 1 or 2, right? On
hmm
that same gap, or either
hmm
lower than that gap.
hmm hmm
But if it pushed higher than that the 1 to 2, that seems like it's changing direction. It's
yeah,
pushing up now.
the
Okay.
change of direction is you want to look at the three or the one in this
The
case.
3 or the 1. Right,
Yeah,
exactly.
the three or the one in this case. And the reason being is at the three, at the one in particular, you just took liquidity.
Okay.
You just took the yearly low,
Right.
and the one could actually come down lower.
It can go to the
It could
three
come
and
down lower. Yeah.
right, right,
And it could go to the same around at or around the same level that the three is.
right.
But I'm just cutting it short because we would have cleared the yearly opening price, yearly low, right?
Okay.
So you can look for a bounce around there, right? But three is the highest probability because this is the first time we would have came and touched this weekly order block, right?
Okay.
And
Right.
since we touched the weekly order block for the first time, we probably gonna get a bounce from there.
Okay.
And not to say we have to, but there's just a higher probability that we'll come inside of this order block at some point and then try to bounce. And it really higher probability is the three and the five that we get a bounce. Highest probability, right?
Right.
Because if we come in on the three or the five, that means we're pressing into the weekly order block. And
Mm.
we could actually see the reversal there because it's higher time frame point, bullish point of interest. And at the higher time frame bullish points of interest, that's usually has a higher probability to hold than if we were to come to like a 15-minute or a 5-minute order block or a 5-minute
Right.
fair value gap. You know, it's likely not to hold unless it's in line with higher time frame. So same thing on the three, we can see the bounce, but if we do start to see the bounce on the if we see the bounce on the three, that means we need to get back above the yearly price. We should see price hold above the yearly. We should see price hold above inside of this price gap. We should
Yeah.
probably see the weekly get held, and then we should probably see this new week opening gap get held if it starts to go up. But at that point, then you will see another 1-5 move to the upside from starting at the three. If we get down to if we do the 3-4 and we don't see that and we start to see rejection right here, that could be our sell setup to sell off to take out the three and then trade deeper into the fair value. Oh, I mean inside of the order block. Wale, I think I saw your hand.
Hey, would this be a good time to start thinking about, and this is not day trading, this is thinking about more like a long play. If you were going to buy, let's just say enter yearly at that five, if it was going to either the three, the one, three, and the five would be excellent places to buy, right?
Mm-hmm.
Yeah.
Mm-hmm. But
That- That's
I
what
don't
I've been doing.
I
Excuse
don't
me.
know.
I'm saying.
Right now it's too much uncertainty right now. I
Okay.
can't say that I would offer a long-term buy right now. We're gonna have to get some kind of sign that there is a shift in the narrative of the war. Plus, we got seasonal lows coming up anyway. We got
Right.
the March, April lows, March, April, May lows possibly coming up anyway. And like we talked about a couple weeks ago, we're in rotation right now already. This is already rotation. Like every buy that we see is
It's
either
short lived.
is short-lived, right? So
Yeah.
you
Yep.
see that they want to go lower, right?
No. Right.
And we've been taking every yearly low that we've made, we've taken it out. So at the point we are right now, right? This is the yearly opening price. We set a low, we start setting lows for the year after this is the yearly opening, right? We set the low here, we took it out 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 here, and we already in the process of possibly taking this one out already. We haven't seen the rotation to the upside yet.
Right. Right.
We need to see um, higher time frame accumulation. We don't have it yet, right? We actually just broke out of a range. So take all this off, right? We just broke out of like we had this high to this low, then this contracted, right? We had this low to this high, then we contracted over here. We had this high to this low for from December 9th, 11th to the 19th. We've been in this whole range for all this time up until this month. And then we broke out of that range over here. And now we dealing with the expanded range. We got this high, this low. This low is now at risk. We already tapped it once. We need to see like some kind of accumulation at or around this area before we consider whether or not we're gonna take this higher. Let's go to the continuous contract, right? So on the continuous contract, it looks similar, right? We have this high, this low, this high. We contracted, we squeezed the range, and then we pushed up and made this high. But then we just stuck between this low, this high, and then we just kind of ranged all the way until we finally decide to cut through this 66, the 6772 low on March 6th with a real push through on March 9th, follow through on the 12th, a retracement on the 17th, a rejection on the 18th. So how we deal with these lows will kind of tell us like, all right, we got these lows right here at risk. We don't have any bullish catalyst right now. We actually have bearish catalyst at the moment. So while we, a lot of times, they tell you to think in the opposite direction where, you know, um, when you see people selling, you should be thinking buying. True, but you still gotta have a case for it, right? You don't want to just be buying falling knives, right? So
Right. Yeah, I've been losing out like that because I've been looking for the buy and it just ain't been there.
it ain't there. We don't have
Yeah,
no
it ain't
reason
been there.
to buy right
Right.
now,
Right.
right? And the way we did this exercise before was um the way we did this before, we marked off all of the 12 calendar months for the year. This January. That's January. That's January. what kind of year we're in. That's the question we got to figure out. And for what kind of year are we in? We know we in a midterm year. The midterm years always have some bullish, bearish sentiment, right? Especially when the president ain't doing good. We can honestly all agree that the president ain't got the good numbers right now. His numbers are not going with the logic that we will keep the incumbent Republican Party in the House and the Senate during the midterm. The way it's going right now, the Democrats are potentially taking over House and or Senate. So whatever he's doing in office right now stands at risk right now. So this was 2022 was 2022 was a midterm year. And you see what happened in 2022. We had rotation to the downside. And a lot of that rotation took place in March and April. Well, we had an up move, right? We had the year started off down, right? The March month was a retracement in this case. April was a sell-off. May continued, June continued. You got a retracement in July. August continued, September continued. We don't get any pullbacks until third quarter into Q4, right? So that's this year, right? I don't think we can go back any further than this, but I don't think we need too much detail. Then this was COVID over here. So, and you see what happened in our April through our February, March, April months. We got our sell off, then we bounce. So we still got to determine whether or not how this year going to play out, right? I don't think we need to look for really longer term buys until we see how April, May play out. April, May seems like for at least for this year, going into how we going into the current stance of global geopolitics right now, we have issues with the war. All right, peace out, trees. We got issues with the war. We have issues with inflation. We have issues with tariffs. And the issues that we have with inflation right now don't even include the war. Those numbers that we got today on PPI, that's February numbers. The war hadn't started when these numbers were were put together. What's going to happen in when we get the March numbers, when the March and the April numbers. So when we get the CPI and PPI for in April and in May, that's going to be when we actually see the effect of the inflation. We don't even know yet, right? And we not only did we get bad inflation numbers, but we got double. It was double what they thought it was going to be. So I don't remember when the CPI was released, but I know it should have been last week. I'm sure it was last week. Yeah. Okay. So CPI. CPI came in up. It came in as expected, but it still came in up higher than the previous, right? Same thing over here. Pretty much came in as expected. This came in a little lower month over month, right? This is the cost of goods and service being passed to the customers. one point of higher inflation, right? Then our PCE came in at 4% and which is expected, but again, it's still rising, right? Our sign that usually happens first is the prices are passed down to the customers last. So if we seeing higher prices for producers, which is PPI, it's eventually going to get passed down to the customer. And once we start seeing that, they've been able ahead prior to this, they were the companies were handling the tariff in price increases and inflationary price increases. Now, not only do we got the inflationary price increases, the tariff increases, now we also have oil and transportation issue and war increases. So this number right now is likely has the potential, has a high probability to be higher for producers to cost to make and provide services, which will likely eventually be passed down to the customers. And especially because we don't even know what's going on with the tariffs right now. Like, do they get the refund or not? You know? And if they get the refund, are they going to lower their prices now that they got some of their money back? The easy answer to that is no. They're going to keep the prices elevated. And that's what usually happens with inflation. Like, inflation is just setting the new price. And so, with that being said, that this is gonna start to have an effect on the market. And it's just how long will it take to go into effect? So this year has a lower probability of having a high dip buy opportunity, which it will have the opportunity. It's just it's probably gonna happen once we get some news on the war and we figure out whether or not we will have any chance to make any updates to the interest rate because that's the other thing. The interest rate is flat. They didn't change the rate. It's still stuck at 3.75. And because of all the uncertainty right now, there is a lower probability that we get a change a new bullish catalyst to consider new money into the market. That makes sense?
Yeah, it made plenty of sense.
Yeah.
That makes sense, Wale? Mhm.
Yes, sir. Yes, sir. Yes, sir. It did.
Yeah. Yeah.
Thoroughly.
So right now I would not be looking for it yet. And then here's another thing that came across the news. Bank of America and JP Morgan gave opposite guidance on the year. One said buy, look for buying opportunities. The other said look for bearish market. When they don't know, I don't know why we think we should be knowing. And they the one got the money.
Okay.
It was actually three banks that all gave different guidance. One said buy, one said hold, one said sell. Right.
Mhm.
And if they doing that, and what are we supposed how are we supposed to be thinking about this? You know what I'm
Yeah,
saying?
they supposed to be driving the market.
They driving the market and they don't even
Right.
know. So that just lets you know we not in normal circumstances to try to pick bottoms, pick directions. It's just price action. Trade what you see. If you see a chance to buy it, put in a good stop loss. If it don't hit it, you stay in the trade. That's if you see a good buying opportunity and you get taken out, make sure you had your stop in profit. That's it. That's all we can do right now. We in unprecedented I don't care if this is on camera, but we have a retard driving the bus right now. Like we have an idiot driving the bus right now, and he is running into every curb. He's running into cars parked right now. He doing all kind of dumb stuff. And for us to kind of predict what could and wouldn't happen right now is actually unfair to our mental capacity to like try to pick and figure out what this dude doing. It's actually a shot at our intelligence to say that we can figure out what he's doing because none of it is making sense. And even the people who are supposed to be guiding him along the way are allowing him to just be an idiot. So
Yeah, I don't know why they allow him to do that, man. These folks, they know he doing the wrong shit, and
yeah,
they won't say nothing. But the terrorist man quit.
yeah, yeah.
Man,
So
it's looking ugly.
everything. Um, that's my opinion. I that's my opinion. And it is recorded,
And what?
unfortunately.
Oh, you ain't by yourself, so
So
you ain't by
so
yourself.
if we're looking at this logically, right? We need two catalysts to drive the
Mhm.
market in the opposite direction. One is going to obviously be the end of the war, but
Obviously.
the other one could be a reaction based upon what Trump wants, which is the Fed chair switching. And that's
Not
coming
until May.
exactly. That's coming in a couple of months.
Hmm.
So April seems like it's going to be another
Hmm.
red situation until they flood the market with what they want to flood the market with. Um, so if I'm correct, which I told you what I was going to do 3 sessions ago, if I get so honestly, what we need to be doing right now is just trading what we see, making as much as
Hmm.
we can, and just holding on. Because I'm not
Hmm.
trading in the summer. If this is gonna persist, I'm not trading in the summer. I'm gonna have enough to pay myself based upon 10 points each day and be good.
Hmm.
Because it's unpredictable. You can't go left or right. You can't go up or down with this. So
Hmm.
I take a day or two off, and I'm looking at the charts right now. I'm laughing because I
Yeah,
didn't even know what was going on there.
yeah, yeah. You can't take long-term positions right now. At least not for the buy. I mean, and then even for the sales, like the even though we dropping, the swings to the upside have been strong, just as strong, but they just been getting sold off. Like even this move we did this week, like it was a move to the upside for 152 points. That's a 2% move, 2.2% move, just to follow it up with a 2.33%, 158-point move in the opposite direction, all in 1 week. So we've moved 5% in a week. Overall, we moved 2.5% up, 2.5% down almost, you know.
So bearish territory is already achieved, or are we still looking for that 20% drop?
From the high on NQ and Dow, we've done 10%.
10. So we're halfway there.
We've done 10%, right?
All right. That's fine.
Our our all-time high, I think the last time I checked was I think we were at 6.5% on ES, which is still the same from the last low. So we 6.56% on ES. Let me drop this chart right quick. I think we were 9.98% on in Q, which we should still be right around there right now. And I think that we were 8.5% on Dow. So we already crossed the 10% mark from the all-time high. So since the last time we made an all-time high, we're down 10% almost on Dow and NQ already. So here's NQ. The all-time high was the high that was made over here. From the low we made 10% already. From where we close is right around 8% yesterday, with the potential for us to take out that low. Once we take out that low, we definitely pass 10%. And I've even heard them saying that we could be doing 20 to 30% drops this year. What is what's Dow? Dow, I think, is at 10% right now. All-time high is up here. We close. We are we are still moving below the low. So we're at 8.5% now, 8.7%. So yeah, we already halfway into bearish territory. And again, those same banks who don't know what they want to do, they are projecting. Let me see if I can find it. End of the year, 71, 100, only a 4% climb. That they're saying basically we only going to see 4% growth. That would imply that we move down to some extent, or we range to some extent over throughout the year. If we only seeing 4% growth, that means we've either went down very, very low, or we've been sideways for most of the year. For us to see a 7,100 price target. And you see that what they note right here. Key highlights of the forecast: S&P 7,100 target, one of the most bearish on Wall Street. So again, this means that we would have seen at least a 10 to 20% drop. Downside, let's see if we can refine this. Oops. Yep. Primary downside scenario suggests a drop to 5,500, representing a roughly 20% decline. So this is already telling you they thinking 20 to 30% drop. What about NASDAQ? Also, see, they said S&P. They are saying pretty much also 20%. What about JP Morgan? Let me take this out. They saying the opposite. This. They saying they see 10 to 25% gains on the year, right? GDP growth slows. Inflation is expected to settle around 2%. So they seeing a slowing in the inflation. They saying you're in 7,500 on S&P. So let's see. Let's see another one. Who is another name? Let's see what BlackRock. Do they got a projection out? I like doing what they do anyway. BlackRock. Or no, let's look up Berkshire. I don't know if I'm gonna spell it right.
BER.
I got it. Oops.
Mm.
Let's go S&P. Okay. They are they're somewhat similar to JP Morgan. They're expecting 76, 75 to 76, but they still seeing downside. Despite early volatility, analysts in February anticipated a 10 to 12% gain by the end of the year. This is, but this is early in February. This is without considering the war. So even these estimates will need to be revised, right? So even these estimates aren't really considering what happened with the war yet. Let's see what this is. Who is this? S&P. I don't know who that is. Yeah, this is without consideration of the war. So you have to take these with the grain of salt because all of it seemed like a lot of these projections and forecasts were made without considering the events because of the war. What does Goldman Sachs say? 76. Base case for 7,600. Risk, all of the base cases bullish. A severe oil supply shock related to the Middle East conflict could drive the index to 5,400. So again, that's also adding to the 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 case that we do drop, you know. And then again, you can see Berkshire Hathaway, Goldman Sachs, Bank of America, they all saying different stuff. They all saying completely different things. Um, Scenario S&P target implied return, bull case 85. Base case 71. Bears case 55. Yeah, that lines up. Where you getting that from, Anna?
This is from Bank of America and Gemini. I just saw
Oh, okay.
that same thing.
Yeah. Yeah. So, yeah, it just go to show you they don't even know what to expect.
Mhm.
So, but on that note, I think I dropped everything. I think I dropped everything. We got anything else?
No,
Got
you dropped the
anything?
chart, all those things.
I will put the video up. Um, and anybody got any more questions? If not, I'm gonna go ahead and get off this thing and see what I can get. See what I can get, man.
I heard that.
Uh,
Well, everybody have a good one. Good night. Appreciate it, Corey.
Okay, okay. All right, y'all. I'm gonna have the video up shortly, soon as it's done processing, and I'll drop that in the chat, man. So I'll catch y'all in the chat or in the group the rest of the week, man. If not, enjoy y'all weekend and peace out.
Thank
All
you. Good
right.
night.
All right.